Good afternoon, and today is October 5th, 2023. It's a Thursday. And let's do an end of day review for today to see what lesson we learned and how we improve our trading. So today we see that it's closed at 24.46. Which is above the key level 22.29 right here, right? So let's put that to a note, right? So today it's open and then it's closed 424. 24.46. And let's see. So it's open right here at 9:30 at 4:23. For 23. For 20, for 23.90. So I mean, the market provide a wonderful opportunity for us right there. Okay, I want to go into the very first trade. I mean, today is Thursday, right? We take one real trade, but let's examine that. Okay, that we take the real trade right here. Total loss up is a real trade. So we try to take one trade switch, either on Thursday or Friday, because we're learning, so we don't want to do much at all. Our main purpose is just practice, and we're just on this journey about 3-4 months. So we still have a lot of lesson for us to learn before we commit to do any real scale up, right? You have to practice first. So, but let's look right here, and we can see how we learn our lesson, right? Because when we first today we don't start. Today we start a little late, right? We start 10:08. Is it this one? Today October 5th. Yeah, so basically we see a short setup right here. We mark this candle, right, and the last swing high. So the candle at 9 is open just below the entry level at 43 right there. So we go short. This candle open below, so we get we get ready and go short right away. When it get up there, we short them. That's an idea right there. And our stop loss, our target going to be this level, right? The 22.29. And let's look at how it looked like on the 1 minute. Well, on the 1 minute, it's right here. The level entry right here, right? But we did not trade in the pre-market, so we have to wait for market open. And when the market open, then on the M1, we specify the level on the M1 1 minute at 424.88, because you see right here is the total subset up is right here is a 4 spread out from its level, right? So people who chase here get stopped out right there. You see, if they go along around this level, they get stopped out. They thought that, oh, it's gonna break out, but it did not. So as soon as the market move up here, we put a sell stop right here, and it's a perfect entry. You will never get very quick right here. The risk reward ratio is very good right there. If we are stopped right here, but if we let it run all the way to the 22.29 level, so 50 cents more. Yeah, about 50 cents more. Yeah, the target is hit at the level 20 right here, right? 20.29 right there, at 10.38 right there. So it's a perfect trade. And you know what? This is our practice trade, right? When we go in, when we start the trading, we saw that. But the funny part that we don't wait for that to play out completely, and somehow we go in here, right? We have to suppose for it to clear, and it happened to clear that. We go in here and then we chase this trade right here. This is the real trade we play. Right. The reason why, because we look here, we saw also is a total sub right here. It's the lesson learned part right here. Yeah. We go in right here because we identify the level, right? So we feel like we should put a buy stop right here. If we go right here, then perfect going here. However, we mix that and then we chase it. This is a lesson then for it right there. Okay, so the right entry should be here. That's the right entry for total sub. The correct entry for total sub long. Right, must be a buy stop at 10.25 candle, right? And we missed that. And when we meet that, what we do? We chase them. That's the psychology challenge that we are working on right now. Yeah, and I'm glad that it happened, because it happened so we can go back and reassemble our behavior, our psychology. Challenge or emotional challenge right there. So we have to work on our emotion right there. When we feel like we mix it, then we chase. That's we impulsive right now. That is a very very common issue for the beginner, like all of us right there. We're glad that we recognize that, because when we are aware of that, then we come up with a process, with a tool to help her to improve this. Okay. Okay, before we go to later, okay, the reason why we chase this, right? We identify the level, right? And we saw it's a fall breakout. It's not going to break down, right? And then we feel like we mix it, and then we chase right here. We go in right here, and then we get stop out at 35 right here. Yes, we check, and then we take a loss at 57 cents right there. So we stop out. Yes, that's the record right there. Okay, so what the lesson learned for us right there? So here the first lesson we learned. Okay, so we play the fall breakout with turtle soup, right? But if that fail, that means the breakout is happening, then we can switch our position. In this case, which is we go long, we can switch to short. So that's the idea right there. But remember, right now we have our rule, so we just play by the rule right now, which is just one trade. But that's the lesson we learn. Okay, so right here, as soon as we see this candle close below this level, then we need to get out of the trade. We don't have to wait until we hit our stop loss, and we can switch into go to short right away, because this level is become a pivot, a level right there. You know, the level that can tell us if it fell to hold, then it's gonna be a real breakout, and we can short them. This level should not be break if the fall breakout gonna hold gonna take place, right? But in this case, not profit fall breakouts. It's a real breakout, and we switch. So that's the first lesson we learn. The second lesson we learned is that the time entry. So we little bit caught up on the 1 minute. We don't see that, but if you look at the 5 minutes, it seems like that makes sense that we going in at this candle at 10:30 right there, because we have to wait to see at 10:30 is close, because right now it's very close to, at that moment it's very close to this level of the DR. So we better wait, right? Wait to see it break down this level, or it's gonna be how reverse and go back. So that's the lesson we learned. Okay, the second lesson we learned is right here. We have to wait for the sell side liquidity key level at 421.64 on the 1 hour time frame before we can go long. Let's take a look. What do we mean by that? Okay, if you look at the 1 hour time frame, you see it's make a huge sense, and we didn't see it at first. When we look back, we see that the market give us a the market saw its hand, and we failed to see that. We failed to listen to the market. We failed to see that the market leave behind a signature, because right here you see this key level, right? And it should go 1 cent above that to rate the buy side. then the next logical gonna be is that it's gonna rate this sell side. So if you wait for it to rate this sell side and it close above that, then you know you're gonna go long at the heel lesson for it right there. You see, right there. Because right here we see the setup is this is gonna be a fall breakout, right? Then we can short them, and we know that it's gonna retest, gonna take this sell side liquidity. Because this is the swing from swing low to the swing high right there, and this two level, one is for buy side and one sell side. I mean, yeah, buy side, sell. And we see that it just rate that buy side, then the next logical move for the liquidity is gonna wrap this sell side liquidity, and it did. Look at the 1 minute, I mean 1 hour, we can see that. Where's 1 hour? Okay, right here, right? So right here we have this level is 43, right? This one is 44. You see that? I mean 45, 2 cents above. See that? 2 cents above. Let's put a note right here. So it's a buy side liquidity rate right here. So which level is 425 or 45? So just yes. See that? So it rate this buy side, then the next logical move you're gonna do, it need to take this sell side. And you see how the market is very precise. At first it do right here, right? You see what's the low of this? The low of this level is 421.64. Can you guess what this one? It's just 1 cent above. So it trapped this buy side, I mean sell side, and the last move it sweep that and then it reverse. You see, this one is 65, 421.65, and this 421.64. So whoever coming in and go long will get stopped out right away on the next, candle right there. So the market moved very precisely right there, and that's what we learned right there. So if we want to go long, right, we have to wait until it's clear out the sell side liquidity. That's what the note we put right there, right? And the reason because it run from buy side liquidity rate to sell side liquidity right there. I think we need to take quick screenshot. Beautiful right here. Okay, right here. We need to put this in our branch so next time we recognize this, so we don't do the impulse trade chases fear missing out. We need to control that. We need to working on that, right? So basically we say right here is a buy side liquidity rate right here. And then the next move right here gonna be sell side liquidity rate, right? And then we say go long if it's close above. So we're gonna go long. We know they're gonna rate it buy side. It just rated it, not It's called stop run. It's another word for that. It's stop run. That's it. And as soon as we saw the close above, then we're gonna go in and go long right there. Above the rated sell liquidity. Yeah, here's what we learned a lot of value lesson from our trade today. The only real trade we take for this week, right? First, we learned that we still have a challenge on our emotion because we saw the setup and we feel like we may mix this instead of patiently wait. We go in and we chase. We just do unconsciously right there. So that we have to be aware of that emotion challenge that we need to working on. We have to somehow to be aware of that part in our mindset, so we can improve it, because it somehow is unconsciously, you know, influence our decision. In other words, is that it's unconsciously take control of our mind at that moment. We feel like we hijacked by that that part of our mind, our you know, ourself right there. It did hijack right there because it's just a survival mode, right? Because feel mixing out, and then the fear, right? The fear of mixing out. So we act on that trade out of fear. We don't want to do that. We want to trade out of, you know, the state of mind of, you know, impression. Because when we impression, we're gonna look at the market, and when we listen to the market, and we're totally in sync with the market. So the decision we trade right here on this trade is out of sync with the market. Market tell us very clear where it's going, and it haven't finished its down move, and we jumping, we take along. So that's the first, you know, so-called psychological lesson that we learned. That's the issue that we need to work on ourselves. So the next trade for us is that we have to be completely in sync with the market, and we have to plan out our trade. Don't just, you know, jump in and trade. And even if we see the setup and we miss the entry at the right time, then don't chase it, right? Okay, so we already see this, right? So the proper entry, it should be at this one, and we miss that, which will be changed right there. So we learn about 1, 2, 3. This one is the same, right? It's about the level from both ends. So 1. I mean, we put 5 points in here, but I think 2 key lessons first is about psychological issue we have, is that when we feel like we miss the trade, the entry, we can't chase it. And the second is that we have to read to see the level, the key level from sell side, buy side. So we don't want to be go long when the market haven't finished, you know, clear the sell side liquidity. We have to wait for the market completely clear the sell side so we can go in. because when we go in early, we get stop out, and that's exactly what happened. And vice versa, when we go short, make sure that let the market clear or read the buy side completely, then there's no longer liquidity there, so it will go down. So that's the huge lesson we learned right there. And I really love this. It's like a perfect picture right here. Man, the markets, give us basically show its hand to us right there. You see that? It rate only, 2 cents above this. It rated, and we apply the total sub right there, and we know it's a fall breakout. Then we take advantage of that, and as soon as we saw it's clear the sell side liquidity at this level, and it close above that, then we know if we still short, we have to get out, and then we switch into long setup right there. If we trade like that, we completely in the zone, or we completely in the harmony, perfect harmony with market right there. That is the market research that we are trying to become right there. And if you read the book of market research, you can see that all of them is start out like us, right? They impulsive, they chase the trade, and a lot of them blow up their account many times. And I see the common, denominator, all of them that they keep trying, they don't give up. And I can see the common denominator from them is that 5 years. Some of the trader, I think like Tom Brussels, first 5 years he lost, he struggled, but he don't give up. So our journey, we start about 3-4 months ago. So, we still have a long way to go. Let's be honest, we still have a long way to go. But at least today, we start nail out the issue we have is that we, in our mind, in our subconscious, in this case, we unconsciously take the trade. When we have a feeling like we're mixing out, we just, chase the trade. And that exactly show up in this right here. That's the best lesson we learn. That could be, that's a bad lesson the market teacher right here. It show us the true color of ourselves. No one can show us better than this trade. It shows that we have an error in terms of mindset right here. We chase this, right? The right entry had to be right here. You put a buy stop. Remember, in order to trade the turtle soup, which is false breakout correctly, you have to use the buy side right here. But look what happened. We feel like, I remember, tonight I will watch the video again, right? And you can watch again. You can see how, what we're thinking in our mind when we take this trade, right? As soon as we saw this setup and we said, boom, boom, we go up. Wow, we feel like we missed the trade. Then we go in here, we put it right here. And in order to go in here, what we do, I remember I click on the buy the markets, which is basically the buy limit. And it's the opposite of the buy stop. And we should not do that. The right way in trade turtle soup is you have to use buy stop or sell stop. Because when the price move down here, you already put your order in here. That means you already plan out your entry. right? So that prevent us from chasing the trade. And exactly, we did chase the trade right there. That's the beautiful about this. I don't know, but I really appreciate that the lesson we learned today. It's so deep. It gives us a very good angle to look back on ourselves, how we how we make the decision in the real time, and we can internalize some part of ourselves that we need to improve in order to get better, in order to be a better trader right there. So when we mix with chases and we get stop out. Okay, so next time, let's say we go in right here, right? We put buy stop and it take our order and go up. Then as soon as it go up, we have to move our stop loss to break even. Because in this case, what if the fall breakout become, you know, a real breakout? I think that we did put a note right here. What if the fall breakout becomes real breakout? Then that allow us to be switch to short. That's right. So as soon as we saw the level breakout of this candle, we don't have to wait for our stop loss to get hit. We can get out and switch to long. Right? Yep. I think that we dwell well enough on the lesson today. So let's move on. I want to see real quick on this setup. Okay, so today if we do the DR model, we did get the 0.5 standard deviation targets, but very hard. Yeah, when it retests right here, you can go in and get the target right here. But the tricky part is today it break down and then it go up, it break up. So today the DR model is invalid right there, right? Because the DR model define that by 10:30 we either have the low of the day, which is in this case, right? Because it's go down and break the DR low, so it confirm right there. However, it go up and it check out the London, not the London, I mean the DR high also, so it's invalid in the DR model today, right there. So if you are the one DR model, you short right here and you don't take your profits at 0.5 standard deviation, you will get stop out. But I want to see if we have any turtle soup right here. No, we don't. No, we don't. So right here we can see that we have a market structure shift right here, right? Is that right? Oh, let's go back here. I think we're out of time, but I think one trade that we, yes. So basically, on the real trade we go long, right? But if we wait a little bit, we still have a chance to go long. Exactly on the 1 minute time frame. It's a beautiful right here. You see? So we go long in here. Is a mistake, right? Because the key level, the sell side liquidity down here need to be clear, which is the what level needs to be clear? I think 420. Yeah, 421, right? 421. look at the 1 hour time frame. Here, this level needs to be clear. 421.64. That level needs to be clear. 421.65. Okay, it's clear right there. It go down, right? It go all the way 421.65. Yeah, around that level. Right here, this level 65. Yeah, this level right here. It clear that. You see, it's clear as sell liquidity right there, this level right there. And then we mark the key level for turtle soup, right? You mark key level turtle soup right there, because this is the latest swing low of the 20 candle right there. You mark the previous one right there, that will your key level to entry. Then you put a buy stop. Look at that. As soon as you hit buy stop, you never touch that level again. So that is a very high setup. The reason why it happened, because it clear out the liquidity, sell side liquidity at 421.64 right there. That's what had happened. Right here we have this level, but this level is not important at all. That's the reason why it continued to go out and clear out the sell side liquidity. So this one is a real breakout, not fall breakout, but this one is a fall breakout. So whoever goes short will get all stop out right there. That's the beautiful right here. You see the terrorist on put buy stop at 421.48 right there. And you see, as soon as you put buy stop, your order get executed, will never return to that level again, and you have a huge move up right there. Let's go back to the charts and see what the real. So the entry time will be 11:10 for us, right? 11:10, yeah, right there. And the exit time is 12:30. Let's see, is it 12:30? Why would you 12:30? Hold on. Let's go to the 1 minute time frame. Okay, yeah, we exit here, or if we stay in the trade, we are gonna make more profit. Look at that. Wow. Yeah, look at that. Wow, the target right here, 12:30, right? Or we get the target right here. And right here you can see that the risk reward is huge. You see, we go in right here with stop loss right here, right? We see we reach only 30 cents. Man, we need to get it nailed down. Next time we do exactly like this. We're not gonna chase them. We have to put down our trade like that. I want to put it on the right. And then we want the target is at this level. So if we exit the trade right here, we get around 12:30, right? But if we let it run, look at that, it's running right by side at this level right here. Let it run, we can maximize our profits all the way here. And you see how much we get? Man, it's a huge trade. Let me finish this and then we can wrap up right here. Look at that. Risk reward 31 cents. We either get $1.97 or $3.84. Man, that's amazing trade right there. We not, yeah, that's the reason why sometimes we feel frustrated because we saw that, but we not materialize yet. So let's give ourselves time and patience. We still have a long time. We still have a long way to go. So we just start a journey to be patient with ourselves. Give ourselves room to make error, room to grow. It's very fun, right? To enjoy the process, enjoy the journey. You know, make money is not our intermediate goal right now. Our goal is just follow the process, improve the process, make sure we follow our rule. Whatever rule we set, we just follow it, right? Um, 12, 30, or another one maybe 14, right? 45, and the risk reward ratio is 30 cents and $1.97, right? Which is 1 to what? 6, right? Yeah, 1 to 6 risk reward ratio right there. Okay. Or 30 cents, actually 31 cents. 31 cents to what the reward? $3.84. Man, that's huge. So 30 times, oh man, it's like 1 to 10. Yeah, 1 to 11. Can you believe that? Risk reward ratio. Wow, what a wonderful trade. All right, I think we go over 13 minutes, but it's good that we capture what we learn. Will be excellent right there. So second exit time will be 14:45. Yes, and risk reward ratio is 1 to 6 or 1 to 11. Man, look at that. All right, that's great review for today. Bye for now. Have a wonderful evening.